Good morning, everyone. It's Tuesday. Welcome to Forex Focus. I'm Pete Bowman. He's Glenn Fraber. How are you, sir?
I'm good. Tuesday, May 13th.
It is May. It's starting to warm up a little bit in Chicago, but you were already talking about a Christmas album. Tell me more about this.
Pete likes to joke that I put together calendars, with 12 pictures of myself that are themed.
Well, we were going to do a tastyfx calendar.
Right.
We're giving you a good month.
Yeah. The June month. That's the top slot. But
that's a top slot.
Yeah, but I think my focus is already on a Christmas album. I think this year I think it would be one of... Are you going Michael Bublé with the old line favorites with a little twist to it, or are you going more the beep, bop, boop stuff you listened to over the weekend? Definitely more Bublé, maybe some auto-tune in there, some T-Pain. But I think it would be...
Those are just random words. You're making those up right now.
No.
I'm going to have some skedaddle and some backstop. Sure.
I just think it would be a pretty hilarious running joke, I think, in perpetuity, to have 3 recorded Christmas songs. So when you invite people over...
I like it. You're playing your own.
You just have it playing, and then it takes people probably a minute to realize... Well... 10 seconds to realize it's not professional.
Did you ever sing it in like school or anything?
No, I played the trumpet.
Do you have any kind of...
I've conducted.
Do you have any... Can you carry it to it? See, because I played saxophone, clarinet stuff, but I have no pitch, so I could never carry a tune.
Yeah,
Can you sing?
I wouldn't say. Well, hence the auto-tune. I think I'm going to need some digital support.
Gotcha. And now auto-tune what? Takes your voice and then... corrects it?
Correct. It like registers the closest note to what you're trying to do and then pitches it up or down.
Have you actually tried it?
Yeah, it's pretty freaky.
Is it pretty slick?
And yeah, if you are on pitch, then it doesn't sound as auto-tuned as if you're very off. So yeah, we'll see.
So I'd sound like a robot from the 60s.
Exactly.
Yeah, okay. Very good.
But no,
that's good.
It's May. I'll get outside. It's beautiful outside.
And you were on with Ilya and Chris Vecchio yesterday.
Oh, yeah. Great time. Overtime.
As we get closer to pushing tastyfx into the tasty trade world, pushing, sharing, empowering traders with more product to trade, which is great.
Yeah. They're excited about it.
Yeah. Ilya traded FX professionally for, I think, a bank for a number of years. So great guys. Well done.
Thank you.
First foray into talking a little bit with the tasty world about this upcoming product launch. So very exciting.
Hopefully everyone's excited.
Good.
But this morning we talked about what's to come in about an hour here. We've got CPI coming out. If we want to jump into the platform, this will be, on Friday, if you asked me, what am I looking forward to next week, what might give a little... jump start to these Forex markets that were starting to come in a fair bit in volatility.
Yeah.
We had that trade deal with the UK on Thursday that helped give a little bit of a spark.
Deal, framework, words.
Exactly. All packaged up and ready to go. Had that, and on Friday was thinking this morning's CPI print would be the talk of the week because CPI inflation a week after the Fed, made the headline. Inflation is the thing to watch, the thing we're watching, the reason why we're keeping rates elevated for the moment, and what could be a risk to jump up higher. But over the weekend, we had more exciting news, trade deal with China, that led to, you were on here with Frank yesterday morning, talking about the Sunday open and wondering if any of those moves would stick. They did throughout
they stuck
throughout the day.
If you were short, you got stuck. So, it was surprising to see the, they had that announcement at 2:00 in the morning where they really put gas into the S&Ps. They bought the dollar very strongly right there, and it did stick all day, and I was really surprised by the amount of movement and no real pullback whatsoever.
Yeah, a couple interesting ones to me was first, we have this euro dollar that is now at month-long lows. Interesting to me that the pound actually didn't gap.
No.
We were here and the Friday close and opened right there at the Sunday open. One of the only ones that didn't gap, but very similar price action to the pound, just took a little bit to catch up.
Yeah, euro sterling definitely showing a little bit of that relative value play, continuing to soften up against that 84 level there.
Absolutely.
Interesting inflection point to see if we see any bounce in the euro.
The one I'm looking at, though, is this Australian dollar.
Yeah.
I mean, this one, very interesting to me just because while we've had a lot of dollar stories as of late, it hasn't necessarily been as unified as when the dollar isn't in focus. We've seen a lot of distinct movements against safe haven currencies like the yen and the franc, and then a lot more risk on, risk off sentiment here in this Australian dollar. And so really surprising to me that yesterday we saw such a strong move in this pair to the US dollar's favor when it was such a green day for equities.
Right.
Over the past month since Liberation Day, it's been
You're hitting all the buzzwords.
Oh
today,
yeah,
aren't you?
I'm
Look
firing.
at you.
If equities were up, if it was kind of a risk on type of day, then that meant the Australian dollar was getting a bid, taking it all out yesterday. But what happened overnight? I mean, this is the only one that didn't come in completely.
Yeah.
Now we've drifted back above 64 cents here. Was there anything major that came out?
No, I think it's a little bit China markets, Asian markets were higher. And I think we saw a little bit of
Consumer confidence.
Yeah, but we also saw, again, where we are in Aussie is still that lower end of that bigger range. So it's interesting to see that this is one where you could argue, well, I get a good pullback in euro today on CPI. It's worth buying. Sure. In terms of a 450-point pip dip, yeah, but if the dollar, say we have a high CPI print, interest rates trade, bonds trade lower, which means rates trade higher, probably see a bid come into the dollar. The question is, so euro's lower, Aussie's lower, Canada's lower, yen's lower. What do you buy? And you would say, well, the one that's most on sale. Now, maybe yes, maybe no, but the fact that the Aussie has held in so well here, if you get that 40 or 50 point pullback in Aussie, given that this is one data point,
Yeah.
and Aussie has, from a structural kind of tape action market short, performed so much better here, that may be, again, you love to buy the thing that's on sale, but you find that, again, buying Aussie on sale on the way down was really tough.
I was going to say,
it's just-
we're hugging this 64 cent level now, but
Yeah.
no time on the way down.
Did it give you a reprieve? And there were times where euro was up and this continued to roll over. Let's not argue why that dynamic has changed. Let's just accept it as traders. And while you're not buying a 400 pip pullback in Aussie, where you would be if you're buying sub 111 in euros, structure-wise, you're buying something that is finding buyers at these levels and may find buyers again. So, you could pick a little bit of both, which is great because you could, what's wonderful with SpotFX is you can size appropriately. So, it's an interesting way to see how this all shakes out here. Definitely having a hard time getting through 65 cents. Kiwi getting through 60 cents, same thing there. Tried it, just hasn't done it, but we haven't gotten back to those. You would expect with looking at that Euro chart, this should be trading about 57 and a quarter.
Right.
And it's not.
No.
So it's like, well, it should. And whenever you add should into a word as a trader, stop saying that because it's priced exactly where the market is saying it's efficiently priced, except the fact that there's a different view on buying dips here versus buying dips in the euro, sterling, or not so much sterling, but euro and yen right now. So we're definitely seeing, depending on what you want to do and where you want to, your bias is either the contrarian or the momentum guy. There's lots of different stories within FX. It's not just a dollar. Obviously, we look at dollar pairs. We look at some non-dollar pairs because there's an interesting insight into that. But it's a diverging dollar story within these different pairs.
Yeah, I mean, and if we're thinking CPI will have implications onto the Fed's decision and U.S. rates, is dollar yen the one to watch here?
You've got to take that, another big move to the upside.
Yeah, to the tune of 2% from Friday's close, hugging that 148 level now. A lot of consolidation. This overnight move to you just looks like waiting for a CPI print or U.S. market open.
So. Yeah, I think so. I think they'll wait for the CPI print, and will. This is the first inflation number that's, again, there's 10 of them. CPI, PPI, PCE.
But
I don't know. There's
on the slate happens to be right after.
This is the first one that should have some tariff effect into it. That's why we're seeing a much higher print than we had seen trend-wise short term. Whether or not that materializes or not, who knows?
We'll find out.
I think there'll be, again, any single data point. I like the opportunity for movement. I'm not so wrapped up around the story. I think this is going to give you a little bit bigger movement. So
now, question for you: when you see a market kind of consolidating like this, and you have a binary event coming up, is this something that, if you have a strong directional bias, you try and get in before the number, or is this more of, does this price action overnight tell you it's more of a wait and see to get some elasticity? If you have an opinion right here at 148, is it worth putting on beforehand and risk getting stopped out immediately if you're wrong on a possible inflation misprint? Or is this one that you think maybe if you're less comfortable with where it is right now, you'd be have a lot more conviction near 149 or 147 that this kind of binary event is one you can wait for after?
Boy, I think there's a lot to unpack there, and it's a great question, and it really speaks to sizing. We all have a comfortable size, whether that's a 5 lot or half a lot in FX. What's great is you can start with whatever you micro lot at 0.01. If you really feel that this market is just building energy right now, it's trapped in a 100 pip range, if that, 70 pip range. At the upper end, the 90th percentile of the move for the last 3 weeks, it's just building energy for the next leg up. And if that CPI print is high, this is going to rip through 149, and I'm not going to be long, and I'm going to be upset. If that is your thought, then put something on. But put something on with the idea that if I'm wrong and the print comes in at 0.3, we could see 147.25 and look at it as, now I'm improving my cost basis.
Right.
So I'm still bullish dollar yen, but I'm improving my cost basis. To put the full amount that you trade on now, and it just, in my mind, you have no idea what the print will move the market.
Yep.
Will it move so in a logical way? I have no idea. But I look at this as a time to look at. Now, say you had actually said, this move from 160 to 142 is enough, and I bought some 144s. I've added a little bit more at 145. I'm long now, and I think we're going right back to the highs. Here would be a case of, we've had a great run. Do you want to trim a little of that off with the idea that when you're in that position and you trim some off, you're in the enviable position of making no bad decisions.
Right.
Because if the market rips to 149 on its way to 150, you're still long.
Exactly.
Albeit a little less, but you're still long. If it pulls back, you can add those units you took off back in and resume the trade. So it's all, especially when you start doing a product, it tends to be binary decision making. Product construction is so simple here, which is great. If you buy them, they go up, you make money. If they go down, you lose. So it all becomes, well, I don't have to worry about, delta and theta and creating a complex strategy. All I have to do is worry about my position sizing and the granularity of, sure, we've got in futures, you've got bigs, minis, and micros. That's great, 3 sizes. Here you've got infinite sizing, which affords you flexibility to tailor your positions back and forth. So I think there's lots of opportunity here. If you think that 7 handles is enough of a run, you know what? You would probably start to layer some orders in around 149. We know 100 pips is completely acceptable on a number derivative. 149, that's probably you are right at a little over 1 standard deviation move right now. 149 and a quarter, 149 and a half, and see if you get paid.
Yeah, and great call out with the sizing, just because, I mean, psychologically from my perspective with not a huge trading account, is just you can have this mindset of, okay, the micro futures positions, I'm comfortable taking 1 lot position or 2, but you really run out of rope very quickly because of the scaling of those is just in 1 contract.
Right.
Whereas here in this market, you can start seriously as small as 0.01 lot and go up by those increments, which allows you just a ton more flexibility, not only to layer in at 0.1 lot at a time, but if your conviction changes dramatically, go from 0.1 lot to 0.5 lots to 1 lot, and scale up really as much as you'd like around events like this.
Absolutely. And that flexibility around, larger volatility gives you more unique price points to trade. That's great because again, as you mentioned, micro contracts, depending on your account size, let you trade 10 ounces of gold instead of 100. Huge. It's definitely taming the beast. But 2 micro gold is 20 ounces of gold. When it's moving $100 a day, that's $2,000 a movement. That's a lot. And they're great contracts. They're liquid. They're good. But in this instance, lots of price points is a tool for us to use. We're never going to pick exactly the right point to get in, the right point to get out. By averaging in a little bit, averaging out a little bit, we're affording ourselves, the market's giving me lots of price points. I'm going to use that as a tool to help optimize trade location. And it's really that flexibility is an important part when you're trading directionally in a static delta basis. Right. It's a tool that comes into play that's very productive.
Question for you, dollar yen here, one that did get a lot of a strong bid on some of the U.S. dollar weakness from kind of a safe haven perspective. What does the future look like for this dollar Swiss franc? If Buy America is back on the table now, does the Swiss franc here have any more appeal, or because the yen can still trade with kind of those rates, U.S. rate stories. I'm struggling to attach kind of where value could be in this dollar Swiss franc pair coming off of historic lows.
And I think it's a great point because, yes, we had a huge fall from above 90 cents to almost 80 cents.
Massive.
But a different looking chart than yen in terms of yen's wrapped right around for 148, or as we talked about, 5% upside, 95th percentile of the range for the last month. This has already put almost 3 cents back into it.
Yeah.
300 pips back into it. So a very different look to it. Both safe haven plays, yes, they both got dollar yen got hit, dollar Swiss got hit very hard with some of the unwind. It seems like we're seeing a little bit of dichotomy between these two pair play out a little bit. And I guess this would be one, well, let's go look at a Swiss yen chart. Don't do that. It's confusing and it's wide. It's not going to give you the relative. It would give you, okay, which one is performing stronger on a relative value basis, but it's not a pair you want to trade. It's not one that's particularly liquid or anything. But I think Swiss is a little bit different here. And it seems to be putting a little bit more back into it. The dollar yen is. I'll be interested to see. I think this slips a little bit in terms of being as interesting as it was.
Right.
Just because we're kind of, if you roll up the chart a little bit, we're getting back into kind of a muddled range. Back down to 83.5. That's at 84.20, kind of stuck a little bit.
Yeah.
In the middle of a range without a lot of areas to pick up in terms of where do I establish, when am I right, when am I wrong. So this is one that has been a great play, both on the downside if you were looking for momentum, because it gave you great, right where you are right now, it gave you great levels to reload and sell some. But I think it's going to be a little bit more of a grind here, and there's probably better places to go.
Well, I think this chart actually is a little bit more indicative of kind of the where we are in this kind of dollar rally, just because there's a fair amount of uncertainty still where, the headline is very bullish. We're coming off of a great day for equities on these trade developments, but a lot of people calling for, what fundamentally has changed. Are we, is the plan still going to work, or are we just now waiting for development news, that's been getting a little stale? And so here I wouldn't be surprised if, there's still a little uncertainty baked in here. If something like CPI or any other indicators or headlines bring some more uncertainty back into the dollar and U.S. assets, we could come right back to this range that we were, pretty consistently in to start May, whereas you also have, a lot of historic precedent above it, where the dollar has gained a lot more in recent months. I mean, in March, way higher.
Right. Let's take a quick peek at Euro Swiss.
All right. Booyah. Here we're looking at the hourly chart.
Okay. Now,
interesting.
This is, again, geographically related, trade related, absolutely. A little bit wider market here, 2 pips. You're going to give up a little bit more here, but let's tighten it up. Show us a little bit more scale here. A little bit more constrained trade than just trading dollar Swiss outright, trading the pair. I mean, this was a pair that for 12 years was actually pegged until it became unwound. But this is another one, if you expect that dollar weakness to continue, Swiss should outperform euro. So you would want to, you would look for a resumption of the downtrend here, where the euro would be underperforming Swiss. In terms of structure, you're not quite there yet, but you've got 1, 2, 3, 4, 5 spots at 94 even where the market's challenged and failed from.
Right.
In terms of setup here, on a CPI move, before I'd look at dollar Swiss, I'd look at euro Swiss, layer in something there to see if I can get something on for a little bit of, if I am thinking that all this dollar strength is just correcting and really punishing everybody who is short the dollar a little bit right now, this is a nice play for me.
Interesting. You would say this over something like maybe a slightly more popular euro pound here, now back at 84 cents.
Greater extreme.
I mean, yeah.
So, it's interesting because what you're doing there is just, if you buy euro pound and you sell euro Swiss, you've just basically created a pound Swiss trade.
Right.
So you can look at pound Swiss. That's probably going to be too wide for us, but it is one way looking at it. I think both of them work. This is definitely at more of an extreme. It depends on, so what I'm looking for is what is the continuing strength of sterling versus euro is interesting. Will that maintain itself?
Right.
I I think euro sterling is more a play on that sterling is just not going to rally or may give up some ground. The other one is the Swiss is going to
Gotcha.
exhibit some strength, and I want to play it from. So two different views on two different plays that are a little bit more slightly lower beta than outright dollar pairs that give you a little bit different nuanced view on the currency pairs.
Well, there you have it. No pair construction for any of these non-dollar crosses required. It's all right there. The chart's already made.
And yeah, you don't have to bring a toolbox with FX. It's great.
Well, you've got CPI coming up here in about 33 minutes. That's what we'll be watching this morning. But thanks for tuning in and talking Forex markets here on a Tuesday. Hope everyone has a great day further, and stay tuned for Tom, Tony, and Vanetta up next on Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at